Hello, everyone. We'll go through the transactions for the purchase of this machine. So August 1st, the company purchased a machine which is a debit to the asset, and it looks like they paid cash for it, a credit of cash, and it's $100,000. And then this is what we call capitalize an asset, because we're not going to expense it because we're actually going to use this machine for an extended period of time. And so we want to record the expense as I consume the asset. And the way we do that is through what we call depreciation expense. And the way we calculate depreciation expense is we take the historical cost minus the salvage value, meaning by the time we're done using it, what's still going to be left divided by the useful life. And again, this can be time or this can be a number of miles or number of hours. The machine's going to work. But as you can see in this problem, we know the historical cost is $100,000. They said when we're done using it, it will have a salvage value of $10,000. And so that's what we'll still think. We'll be able to sell it or scrap it for at the end. And it's going to be good for 10 years, and at the end of 10 years, it'll have that $10,000 still left. So that tells me that I'm going to depreciate $9,000 each year. And so we're going to allocate for 10 years that $9,000 over the life of the asset so that I'm expensing it as I consume it. However, I want you to see that in year 1, $9,000 is the annual depreciation, but I acquired it on August 1st. And so since I acquired it on August 1st, I didn't use it all of the full year before I issued the financial statement. So December 31st, I'm always doing an adjusting journal entry to record the expense of this asset. And that journal entry is debit depreciation, expense, and credit accumulated depreciation. And this $9,000 is my annual depreciation, but I bought it in August. So I want to multiply that by all of because it was August 1st, August, September, October, November, December, which is 5 months. So the depreciation in the first year is only $37.50. Then in year 2. Now I want you to recognize here what's happening is depreciation expense closes out into retained earnings and accumulated depreciation is on the balance sheet offsetting the machine, and it's just a running total. So year 2, my annual depreciation is $9,000, but now I've used it all of the full year. So 1212. So my depreciation to record is $9,000. This is asking what's the journal entry to record for year 2? So the journal entry always stays the same, it's just what's the dollar amount, and in year 2 it's $9,000. If you found this video helpful and would like to see the next educational videos, please subscribe and give it a thumbs up. Additionally, if you have any suggestions for tutorial topics, please write them in the comments. We look forward to your feedback and suggestions. Thank you.